Hello everyone, here we are again with another video outside enjoying the beautiful weather. It seems like you guys liked the last video I did, just like this, so I'm doing it again. Today I want to talk about a bunch of things. It's going to be a short video, but it's mainly about inflation and the actual effects of inflation that many people don't talk about. So inflation has many consequences. The most obvious consequence, of course, is that there will be higher prices, but there's others. So when you print money, it doesn't just increase the price of things. It's a chain reaction. So printing money itself does not cause inflation. It's the velocity of money that dictates how much of the money supply ends up in the economy, blah, blah, blah. But I'm not going to get into that too much. I just want to talk about inflation, the consequences, and how you can prepare, and a bunch of other things. So when the government prints, it doesn't increase prices immediately. It's a chain reaction. It first affects basic materials, then it moves to the industrial sector, and from the industrial sector into consumer prices. Many people use CPI, the Consumer Price Index, to calculate inflation, but that might be misleading and not the best indicator to actually calculate inflation, because there is other consequences than simply increased prices that can skew CPI. Is this. So in a capitalist nation, in capitalism, you want to maximize your production. That there was this belief before the 1700s that you had to produce everything yourself. But today we know that you produce or do the things you're good at, and you can import the things you can get for cheaper. Well, if you have inflation inflating prices of consumer goods, what a country can do is, the same country that prints, is they can simply import those things that would be more expensive now in their own country to produce from cheaper countries. For the US and Canada, that's mostly poor countries in Asia. So the consequence here is, what happens to the production and those companies that are still in your country, in the US? Well, they have to eat the higher prices and pass them to companies that have to produce here, and that will increase the price of things that you have to produce here. So you cannot compete anymore as a local company with those exports you're getting from other countries. So we do have subsidies and all that, which is not a good idea for other reasons, but the main cause, so the problem with this is that those companies, when they have those higher prices to pay, they will simply move out of the US and go somewhere else where they can produce for cheaper and then just export it to the US. So this is kind of like a brain drain that you get when you print money. That's another big consequence. And this is not shown in CPI, because in CPI it would just show you, consumer price, like tech, in the tech sector, or many other things that you can simply import, which are not in the inflation itself, because they were not produced in that country. You just got them for cheaper from another country. So it seems like that CPI is lower than it actually is. So the inflation in the CPI is actually lower than it actually is. So the CPI is 4 to 5% in the last report that came out, but that's not true. If you watch my other videos, or if you follow my blog, I posted screenshots of commodity prices that went up by 50%. Many foods went up by 12, 13%. And year-to-date inflation, based on those numbers, is 6% year-to-date. And there's a trend that every month, the month-to-date inflation is higher than the previous month. If that trend follows, and it will follow, until the end of the year, we're going to have something like 20% of inflation. Well, CPI shows 4 to 5%. Well, that is because a government has incentive to hide inflation from you. It's a political incentive. It makes sense. We could see that with them discontinuing M2s from the money supply. I showed that in another video. So inflation is high, and there's the fear everywhere that the markets will crash and people don't know what to do. So I want to get into that now. I call the entire process the four horsemen of the economical apocalypse, and we're going to explain it. So the first thing that happens before a financial system collapses, and we have many examples of this throughout history, recent examples too, like Venezuela, and in the past we had the Roman Empire, the Chinese dynasties. It all ended the same way, and this is no different today. Number one is that what happens first is that a government or a country overspends, particularly on welfare. As people demand more and more, the country has to tax more or get more revenue through other ways, and if everything fails, they have to print. And that's the first horseman of the apocalypse, so to speak. What happens next is that prices go up, which we can see right now. Prices go up because of inflation, because of the extra money supply. Now we have people with all the extra money from stimulus checks, from the increased money supply. They will increase the demand on the same things. And on top of that, we have people not going back to work, diminishing further the supply of things, and therefore we have heightened prices. That's the second horseman of the apocalypse. What happens next is, instead of simply spending less and people accepting that they are at fault, and backrolling spending and everything, people will go on the street and demand the government to do something about those high prices. And the government acts. They printed more because people wanted more free things, which are not for free. Nothing is for free. Someone has to eat your lunch. In this case, with inflation, is the next generations, and you being poor, the value of your currency is diminishing, while your salaries are and trailing factor, which don't grow with inflation at the same time. So the government profits from having more money to spend on the things you want, and you have less money with your currency diminishing. So it's a hidden tax. That's why they call inflation the hidden flat tax. But the third horseman of the apocalypse is basically that the government will do something about the higher prices, usually in forms of price controls. And we saw that happening in the 70s with President Nixon, I believe. That will further diminish supply, especially supply of food. And when people don't have access to food, that's usually when they go out on the streets and riot. And now we come to the fourth horseman of the apocalypse. It all ends in the same way. Either you have hyperinflation and your country, your population is starving. That's what we see in Venezuela right now. So that's one route you can go. Or you simply become a tyrannical government enslaving your population. That's what we saw Stalin doing. So those are extreme examples, but the four stages, the four steps are always the same in every century, in every country, and it's no different this time. You can't print unlimited money without consequences. So I'm talking about the apocalypse of the financial system and the entire collapse. But there's another consequence, and that is people losing trust in your currency, in this case the American dollar. So in every other country, if a country prints enormous amounts of money, and as your currency becomes valueless, people who live in that country look for alternatives. So let's say if Canada prints too much and housing prices in Toronto or Vancouver go up so much that people just simply cannot afford it anymore, they look for alternatives either within the country, and in case of investing, they will move to the US in many cases. So they will find an alternative currency to be trading in instead of their own currency, which is depreciating in value. Another example you guys might be interested in is the inflation that's happening in Turkey. It's 16% per year, which is pretty high. 26% or more per year is considered hyperinflation. But Turkey, or people in Turkey, are the biggest users of cryptocurrency. And that is because of exactly this reason. People look for an alternative as the currency in your country loses value. In the case of the US, it's a bit different. The US dollar is the backup currency of every other country. So on one hand, it allows the US to print more than others. And frankly, it has to print and inflate their currency over time to facilitate economical growth worldwide, not only for the US. But at the same time, if they overinflate their currency and people lose trust in the US dollar, there's nowhere else to go. I want to give you an analogy. So imagine you are a soup restaurant and you make soup. You make the best soup in town. Your restaurant is full every day. So you're thinking to yourself, how can I sell more of this soup? It's empty after every day I'm serving it. So what you do is you dilute the soup with some water. And people will still come and drink your diluted soup. And you keep doing that and you make more profit because you can sell more soup and everything is great. But eventually you will reach the point where somebody will notice, people will notice that your soup is diluted. And the moment they notice, everything is gonna end quickly, just like that. People will stop coming all at once. And this is frankly what will probably happen with the US dollar. People are looking already for an alternative. You have the Chinese yuan, digital yuan. The Russians are looking for an alternative. And that alternative is not Bitcoin, but it's rather a currency that is backed up by gold. It has to. It has to be backed up by some metal. And why do I say this? The currency that will come and tumble over the USD is backed up by gold. It's because, again, historically, that's always what happened. And it's no different this time. You also have to think about that there's always a shift in the world between West and East. So right now, if you look at China, the Chinese government and Chinese people have very different interests. And they have their own problems, which we don't hear about within their country. So I don't know when. It could be in 10 years, in 15 years, but it's not going to be too long. But when a new China emerges in Asia, or it could even be the current China, I doubt that, but whatever happens next, the Chinas or China that will emerge in the East, I believe the future is in Southeast Asia and in East Asia. All the brain power, all the money, all the commerce, everything economically will move over there after we saw the 4 horsemen of the apocalypse arrive. But I don't know when. It could be many, many years after I'm dead. Or it could be in the next 10 years. It's very hard to tell. But I'm telling you right now, the future is definitely in Asia. Okay, so knowing all this and being scared of inflation alone does not help you. So what should you do? Well, if year to date, by the end of the year, inflation is going to be 20% and not 4 to 5% like it's shown in CPI, you have to buy things now. Get everything you need anyways now. Canned food, toilet paper, everything you would need in the next year or so. Instead of holding it in cash, turn it into something that you can use. And your extra cash in savings, you can always invest. I'm still holding the same belief. Your best investment, number one, is real estate, especially with a fixed mortgage rate of a lower percentage than the inflation rate. So the inflation will simply eat away your mortgage. If you're planning to own a home or own a property that generates cash flow anyways as an investment, I think that's the best thing you can do. Number 2 is holding assets. So in a gold rush, you don't want to be looking for gold to make money, but you want to sell the shovels. So in case of high inflation, the stocks or the investments, the assets you should be in the markets are commodities. So industrials, materials, and energy. I would slowly also look into consumer staples and utilities, as that will increase by the end of the year for sure. I would not be in tech right now because tech is negatively affected by inflation. And number 3, you should hold gold or precious metals. At least 6 months of your expenses should be in precious metals. I would say 70% of that should be silver, or maybe even 80. 10% gold, 10% copper. In case your currency completely collapses, that way, if you have silver coins, everyone understands a silver coin, which is worth $20 or whatever, that you can trade on a day-to-day basis. You don't want to be holding all in gold bars for large purchases, which you can't use for smaller purchases. And that will be useful for you once we come out of the collapse. But until we're coming out of this collapse, of the economical collapse, of the financial system, you want to own things that you can use. Food, water, electricity, medicine, everything you can get. Because you won't be able to get those during the collapse. So I went on a big tangent this time. I talked about a lot of things, and again, I just want to let you know, I'm not saying we are going to collapse, or I'm not saying that it's going to happen soon. I'm just pointing out the consequences historically we had due to high inflation. And history repeats itself, but I don't know how this is going to happen. It could be in 10 years, 15 years, or 50 years. It's impossible to tell when it's going to happen. All you can do at this point is be prepared. So I'm making these YouTube videos to get you guys on my blog. I make almost daily market updates now on my blog about the stock market and changes. And you can see my blog posts about economics and where I talk about these topics, and hopefully give you some guidance of the right things to do and the right steps to take. My content is a bit different than other contents which only talk about stock market crashes or Bitcoin or some meme stocks. My content is a bit different. I actually want to help you. And if you want to help me and support me, please consider leaving a like, following me, and definitely checking out my blog, where you can see all my guides, my almost daily market updates, and my weekly blog posts about everything that is going on in the world of economics and the stock market. Thank you so much for watching, and I see you next time.